Please welcome Warren Wheatley to the stage. Warren spent 2 decades in asset management, private equity, and banking, from ABSA Capital to co-founding the Russia Investment Group as CIO. He then built Altvest to put private equity within reach of ordinary South Africans, took it public on the JSE, and then converted the entire listed company into Africa's first Bitcoin treasury, Africa Bitcoin Corporation. He's here to make the case for Bitcoin. Welcome, Warren.
This BizNews production is brought to you by Brenthurst Wealth. The wealthy aren't leaving South Africa, but their trusts are moving offshore. Invest better with Brenthurst.
Good afternoon, everyone. It's always good to start off a speech with a quote, and I've chosen one that's dear to my heart. The world in which you accumulate your wealth may not be the world in which your children inherit it. Merrill Pick. Everyone. All right. We're discussing the institutional case for Bitcoin today. The Africa Bitcoin Corporation is an institution. We are a non-bank lender. We're 4 years old. And quite interesting, we were born at BizNews. I, in fact, launched the business at this conference 4 years ago. We launched the platform off the BizNews rails, and we've attended everyone. My tag is number 15. I just missed out from getting the single digits by just a little bit. So that's our history. And I'll explain why we changed our name as part and parcel of me making the case for why Bitcoin is ready for institutional adoption. I'm going to remind you guys of the investment case, and I'm glad we discussed gold first, because gold shares some attributes with Bitcoin. And those investment attributes are the following. And these are the two things you need to understand and grasp. The first is absolute scarcity. Now, gold doesn't have absolute scarcity. More and more of it is produced each year. It being indestructible, it maintains its existence, but more or less 2% each year of gold is produced, and so it keeps growing. What that means is that you can be diluted when you hold gold, because more and more of it is produced each year. I think the most important characteristic, though, for me personally, is that it's completely decentralized. Bitcoin, that is. There's no issuer, no managing director, no marketing department, no central authority that controls it. It shares that characteristic with gold, which is why gold and Bitcoin are often compared. And what we've seen is that the inclusion of Bitcoin in a portfolio over the long term has very little correlation to bonds or equities. But that's the investment case, and I think everyone here understands that. Excuse me. And I see when Meryl asked the question how many Bitcoin investors there were quite a few hands up. So that's the investment case. Just over the past 10 years, Bitcoin has outperformed almost every asset class, except ABC, that is. Bitcoin has done 59% per annum. The S&P of that same period, 15. Gold, only 11. SA equities, less than 7%. Real estate in the US, 5%. And US Treasury bills, 2.4%. One of the issues with Bitcoin is that it's become boring. 5 years ago, this room would have been packed. So I'm thinking it's Bitcoin, it may be me, but Bitcoin has become the Facebook of social media. It used to have volatility of 80%. That's how you measure excitement or interest in an investment asset. 80%, it's down to 42% on a 1 year basis. And this last month, below 28%. You get more excitement, more volatility in NVIDIA or Tesla. And so part of its institutionalization is it becoming boring, and it certainly is. Now, what has happened over the last couple of years? There hasn't been much price activity, granted. We're down from our all-time highs. But what we've seen is that Bitcoin has had massive institutional adoption, and the rails and the foundation of institutional adoption are being built very, very aggressively. Not so much in South Africa, but certainly across the world. 12% of Bitcoin that will ever be created is now owned by ETFs. That's huge. BlackRock, Goldman Sachs just announced yesterday they bought a Bitcoin ETF business for $2.3 billion. There are over 200 public companies that now own Bitcoin on their balance sheet. Tesla, SpaceX, Strategy. Large numbers of public companies are hodling Bitcoin. And then we can start talking now about why ABC adopted Bitcoin. One of the issues from an African perspective is none of our assets we own, aside from gold, can be collateralized in the world. And what I mean by that is you can't take a Cape Town property and go to a Swiss bank and raise capital against it. You can't take African cattle. You can't take it to Lloyd's of London and get a loan, or Barclays. We asked them, they said no, right? But for the first time, an African company can own this asset and use it to raise collateral anywhere in the world. And I had my Damascus moment with Bitcoin quite recently, less than 3 years ago. And I'm now fully orange pilled. And it wasn't the number go up issue that turned my mind and changed my heart. It was actually these characteristics that to a financier or a financial engineer can use this asset in the instrumentation and capital formation of a business. And this is what I mean. We ran a sandbox exercise. We bought some Bitcoin. We bought 5, and we started testing what the art of the possible with Bitcoin could be. We are able to, as a company now, and this is a result of this wide-scale adoption across the world, what we are able to do is actually take the Bitcoin, use it as collateral, and go to almost any bank in the world. And when I say any bank, JP Morgan is doing this now, Goldman Sachs, and other large institutions. You can use the Bitcoin, take it as collateral, and get a loan at interest rates as low as 3%. As a non-bank lender in the country, we bring that money back and we borrow it to SMEs at rates of between 16 and 18%. An African company has never, ever been able to do that before. Something else that's quite incredible is our first transaction cost less than $1. Took 3 minutes to do, and that was because I'm clumsy on the internet, and was done in 3 minutes with zero cost, less than $1, and zero legal fees, no lawyers, and everything's captured on-chain, verifiable, safe, sound, quick, and efficient. So capital formation has changed, and entities that have understood this and are using this in their business are going to outpace anyone that doesn't. So that's why we adopted Bitcoin. So for us as Altvest Capital, we've always sought to find capital, bring it to our balance sheet, and on-lend it to SMEs. That's what we tried when we listed our preference shares and tried to attract retail investors. The idea was always to find ways for capital formation on our balance sheet and to use that to give SMEs growth capital. So the mission hasn't changed, but the technology for achieving it did. And once I realized the tool that I had available to me, we were that convinced, we had that much conviction that we went ahead and changed the name. We're now the Africa Bitcoin Corporation. Now 4 engines across the world are driving institutional adoption for Bitcoin. And those four are ETF access, corporate Bitcoin treasuries using Bitcoin in the same way we do. Quite amazingly, banks, credit card companies, and insurance companies, and even governments across the world are now also starting to hodl Bitcoin the same way they do with gold. Just some stats: the ETF unlock, BlackRock listed their IBIT exchange a year and a bit ago. It was the fastest growing ETF in history. I think second only perhaps to the AI one they just recently launched. But $52 billion is already invested in ETFs across the world. That means European, American, and other citizens of the world, we can't do it in SA, can include Bitcoin or exposure to Bitcoin in their savings and retirement products. It's been a record uptake. Like, we've never seen capital flow as quickly into an asset class. Okay. So that's the first engine: ETFs and exposure for retail investors and other institutional investors like pension funds, etc. The engine two, corporates. We've seen across the world a proliferation of public companies using Bitcoin in a variety of ways. The application we do to use it to raise capital is just one. Other companies like Strategy and Smarter Web Company are using it as to issue credit instruments where they pay above average yields. But over 200 companies already today, public companies, thousands more private companies hold Bitcoin today on their balance sheet. Engines 3 and 4. The banking, insurance, and regulatory rails are being built as we speak, and not many people appreciate that. JP Morgan is doing crypto-backed lending. Goldman Sachs is firmly in it. Insurance companies across the globe are starting to bring Bitcoin into their balance sheets for treasury usage. And the fourth engine, sovereigns. We've got countries like El Salvador who have Bitcoin treasury reserves. The US, by executive, when Trump signs an executive ruling, they've taken on a Bitcoin reserve. Certain states are taking on Bitcoin as sovereign reserves. So institutional adoption is accelerating. Don't get left behind. And then once you start peeling back the layers, the market is deep and becoming very, very technical and regulated. If we look at, for example, Bitcoin now has a real derivatives market. There's over 74 billion in open hedged positions as we speak. So collars, puts, options, and a variety of other instruments are now available through ISDAs. ISDAs are international agreements that govern spot trading, govern hedging, collars, and other derivatives. There are even options on the options on the various items. And one of the key items that has changed the way the world is looking at Bitcoin is the CFTC issued guidance in March this year that permits Bitcoin as margin collateral and a regulated derivative. That's the Chicago Futures Trading Exchange. That is a major shift in how the world and institutions view Bitcoin. Another area to look at, there are deep pools of capital available. I mentioned that ABC as a function of what we do. We use Bitcoin as collateral, borrow against it. There's actually right now, as we speak, about $70 billion outstanding as Bitcoin collateral loans. So the market is deep. I mean, we couldn't spend that amount of money even if we tried. The market is deep, liquid, and quite well regulated. S&P are starting to grade Bitcoin-backed collateral. And in fact, there's a company called Ledin, whose Bitcoin-backed lending book has received a BBB rating. first time in history. That happened in Feb this year. Cantor Fitzgerald, one of the biggest investment banks in the world, has raised a $2 billion Bitcoin-backed financing program. So capital formation in this asset class is decidedly vast. Interest rates for Bitcoin-backed lending ranges anywhere from 3% all the way up to about 12% per annum. Now, if you think about our business in particular, I've built the business so that we can access institutional capital from pension funds, banks, insurance companies in the country. That debt costs me 12%. And we take that, we've got to add some fees on, and we on-lend it to SMEs. The cheapest I could possibly give a loan to an SME at is around 18%. That is expensive, but still cheaper than any other non-bank lender in the country. Most other non-bank lenders, if you go to Vodelend as an example, you pay 28% per annum. We've refinanced SMEs at 36, 40, 50%. In Zimbabwe, an SME accesses funding at 20% per month, not per annum, 20% per month. It's impossible to run a business like that. Using Bitcoin, we can get funding at 3%, bring it here, and deliver it to a Zimbabwean SME at 15% per annum. That is life-changing for entrepreneurs, and it's the engine through which we can now grow and grow the capital markets, not only in South Africa, but across Africa. So ABC as an institution is using Bitcoin in this way. And we would urge all other companies in your own business to think about how you can utilize Bitcoin from this perspective. And it's not a number go up or number go down issue. It's just using its attributes, the fact that you can't be diluted, the fact that you can transact seamlessly and cheaply, and the fact that capital is so readily available to be given to you at affordable rates. Right, so those are the deep pools of capital. A very interesting aspect that almost no one is talking about is Bitcoin's interaction with AI. We heard yesterday about AI agents and how they're going to be transacting with each other. And there was a prediction made that AI transactions would be double or more than human transactions within 6 to 3 months. What currency do you think these AI agents are going to be using? It's more likely to be Bitcoin or some other form of stable coin. But Bitcoin seems to be the winner in that particular race. We also heard yesterday about AI and how they're struggling to find grid connection points. Bitcoin miners have ended up being the solution to that particular problem. You can think about it in this way. Whenever you travel and there's a different plug point in your hotel, you need an adapter that allows you to use your device on that plug. Now, you could try and force it in, but two things are likely to happen. You're either going to burn out the electrical components in the hotel room, or you're going to destroy your device. That adapter allows you to use that, to use the electricity that's available in the machine. And in that same way, Bitcoin miners, the guys who plug into, they switch on the machine and they mine Bitcoin. Those are being used as an interface between the grid and these hyperscalers. And the reason is Bitcoin miners are incredibly efficient at usage of electricity. But the most important point is that they can manage usage of electricity. They can be switched up or turned down in a nanosecond. And that ability makes him uniquely positioned to be a buffer for hyperscalers and grids. So we've seen this, myself and Stafford attended plants in Texas where this has been put into place. So we've got these various mechanisms that are ensuring that Bitcoin, the Bitcoin ecosystem, and everything around it has been institutionally adopted, from grid stabilization all the way through to banking rails, payment rails, and finally as an investment option. And then the buyer base keeps broadening. We've got individuals, who buy it, hold it in cold storage, ETFs making it available to the mass market, companies, and now finally banks, insurance companies, and even countries. I think that's it. Thanks, everyone.
This BizNews production is brought to you by Brenthurst Wealth, South Africa's leading boutique wealth manager, trusted to guide families for over 22 years. Invest better with Brenthurst. Start your day a step ahead. BizNews Insider. It delivers the business stories that matter every morning straight to your inbox, sharp, fast, and free. Subscribe now.